Welcome everyone, it's the Crypto Lark and I am super excited to have back on today Lior Gantz. He is the founder of the Wealth Research Group. Lior, welcome back.
Hey, thanks for having me.
Pleasure, absolutely. Now, Lior, there is so much that has happened in the crypto markets since we last spoke, and I want to get your thoughts on some of these different issues. So let's start off with Bitcoin in general. Bitcoin has gone down massively. There's a lot of fear in the markets right now. What is your hot take on Bitcoin at the moment?
Well, first of all, in terms of, with Wealth Research Group, for example, in the newsletter, we covered Bitcoin when it was 400. So it needs to be put in proportions, right? We're 3,500 or 4,000. Even for people who came in at 400 and did not sell this entire way up and have not sold this entire way down, you're talking about a 1,000% move in about a year and a half. This is unheard of regardless. But let's talk about what's going on in general. So in 2017, when I was last on, and I told you this, the sentiment was euphoric. And very important to realize that with technology, specifically with disruptive technology, there's a tendency by investors and by speculators to overestimate the price in the short term and underestimate what can happen in 10 years' time. Very classic phenomenon in many things, in many areas in life. Like, for example, think about all these motivational courses. If I can compare that, you go to a Tony Robbins weekend, you come out of it and say, I'll be a millionaire in 2 weeks. And you start off with a plan. You go out on the road, boom, there's a tire. The tire catches like a little, what you call it? You got a flat tire, and then boom, your head's distracted. Your entire plan is gone. And instead, your entire millionaire in 2 weeks is gone. They have to go to the mechanic, and all that motivation is out the window, right? From a Tony Robbins weekend. But then you don't think, hey, how about a 10-year plan? How about what can I do in a decade here? And it's the same thing with technology. People, crypto is going to change the world. Blockchain is going to change everything. It just doesn't work that way. And you can take a look at what happened with Amazon. It IPO'd for $18 a share in 1997. It went up to $300 a share at the dot-com height. So from 18 to $300 per share, and it crashed to $6 a share from 300 to 6. That's a 95% move down. You could have bought Amazon at $6 a share. I'm talking today's money. So not split adjusted, we're talking $6 to $2,000 today. That's a 3,000 times move. It's every 10 grand turns into 30 mil. So, but will this happen for Bitcoin? So there are many companies that went down 95% in the dot-com bubble burst. Did they all go up as much as Amazon? No. And so this is not a rule where everything that goes down 95% is then going to fly up again and revert to the mean or shoot much more. All it is here's a situation where something was worth $20,000 back in January of 2018, and now it's worth 80% less, right? Or 70% less. So it makes it 70% cheaper. Now, the question to ask is whether or not this Bitcoin is even worth $3,500 or $4,000 a coin. The answer with technology, especially with something like Bitcoin, which doesn't create cash flow. So you can't say, hey, I'm going to buy $4,000 worth of Bitcoin and I'm going to get $100 a month. You can't compare it to an apartment, or you can compare it to a loan that you make. This is a non-paying asset. So you need to compare it to other non-paying assets like collectibles, art, precious metals, non-paying stocks, so non-paying dividend stocks, anything that doesn't pay anything or doesn't yield anything. And you need to figure out whether or not the price you're basically paying now is undervalued compared to its future price, which underneath it all is the value. So, for example, when you looked at Amazon at $6, you needed to hey, is this leadership smart enough to turn around this company, to keep growing it? What do they have? What are the competitive advantages, etc.? You need to go through the same thing with Bitcoin and need to figure that out. If the answer is yes and you hold it, there is no need to sell it. If the answer to you is no, I think that's it. It's going to wither away, either get displaced by a competitor, by something else, or it's just not needed in today's world. We don't need Bitcoin. Then you have no reason to hold it. If your independent research and your thinking, and a lot of it has to do with speculating and imagining where the world is going towards, if that is bullish on Bitcoin, then sure. All 2018 did is make it so that you can buy 5 Bitcoins for the price that you had to pay in January for one.
Mm-hmm.
For the same amount of dollars. And heck, the US dollar is the best performing asset of 2018. So it is. So it's not even so it's even better, especially if you're a foreigner and you held on to dollars. So the way I look at it personally is with every very speculative ideas. 3 things that there's 11 strategies that I ensure that I have. If you go to wealthresearchtube.com/bear, BEAR, that's my 11 bear market strategies for any asset class, and how to mitigate and control your downside and prepare for an upside. So if you go there and you check out, you download that report, you'll have complete access to it. And that's something I did especially for your listeners, because I've listened to many of your shows and you have a very sophisticated audience. So that was important to me to get them 11 strategies that I do personally. But if I can talk about 2 or 3 of them. So one thing that's very important to understand is that you don't need to create a position size. Let's say Lark, that you want to invest $10,000 in cryptocurrencies. It doesn't mean that you have to invest $10,000 tomorrow. So one thing that you can do is split your purchases. What does that do? Let's say you invest $2,000 into Bitcoin tomorrow or today, it doesn't matter, and it starts going up. Then don't invest the rest of the 8,000 that quickly, because now you're riding a trend that's going up.
Mm-hmm.
Nobody's ever died from small profits. On the flip side, if the price starts to go down from when you purchased it, then hey, the fact that you've only bought 2,000 helps you a lot, because the other 80% of your position, you can buy more Bitcoin with it, and you can wait out and basically dollar cost average going down. So that's important. Now in the Bitcoin world, a lot of people hold on for dear life, right? And that's something that was birthed because of the excessive volatility in the stock market, where I've been investing since I was 16 years old. I'm now 34. It goes back to my father's bankruptcy when I was 13, and basically I started working when I was 13 and saving, and by 16 I got my parents to sign a waiver on my bank account so I can run my own investments, and that's when I started investing in the stock market. Got into Bitcoin by fluke, by accident in 2013, skiing in Colorado, and in the lobby of my hotel were 3 people on their computer talking about digital gold. And since I was a big-time gold investor, I bought them all a beer and just listened for 3 hours as they explained what Bitcoin was at $19, and it was $119 the following month. And so that was my first exposure and first big, win with it. So, but anyways, going back to just the idea, if you invest $10,000 into Bitcoin, that means that it means something about the size of your portfolio. So with any speculative idea, it can go big for you, it can go right for you, like it did in 2017 for cryptocurrency investors, but it can also go very bad for you, right? So unless you know the future, you need to have a protection plan. And the second thing you need to have is proportional position sizing compared to your net worth. So if you remember those people that mortgaged their house, that's last year.
People have sold their houses. People have sold everything.
And
Maxed their credit cards. It's
and look,
crazy.
and it can work, right? It can work. I know people in other sectors that have done that have put all their eggs in one basket and kept very good, control of that basket. But it can also work to your disadvantage. And more smart people have died from leverage than anything else. And the last thing you want, especially your age, my age, I'm 34, you're 33. You don't want a catastrophic loss, because a catastrophic loss leaves residue in your mind, in your mentality. Your risk aversion becomes too excessive. You want to put cash under the mattress, and you lose on the opportunity to grow as the world grows wealthier. So position sizing is a fantastic way of mitigating risk. What do? You say, okay, I'll invest 3% of my money into Bitcoin, for example. It could be 10%, right? What you do is you balance a stop loss strategy with that. So if you invest 3% of your portfolio, then you can say, okay, I can allow this to go down 80%, because all it means is, ideally, I've lost 3%, 80% of 3%, right? So I've lost 2.4% of my entire portfolio. So out of a $100,000 portfolio, I only lost $2,400. I can live with that. Now, if you invest 10%, you need to put a tight stop loss in there. So you need to say, okay, I can only lose $2,400, right? Like in the other scenario. So that's 24% stop loss. So if it goes down 24%, I'm out. I can resume it later. It's not a problem, but I want to preserve my capital in case it goes down another 30% or another 40%. Because you got to think about what we call alternative yield. What can I do with this money in the meantime? Work in other asset classes, even fixed income. Can I put it to work for 3 months? Can I lend that 10 grand to somebody for 6% using lendingclub.com or fundrise.com, etc.? Or can I put it in short-term bonds, government bonds? Make 1%, doesn't matter, right? But you still make money. So this is something you need to take into position. And the 11 strategies altogether are in that report on wealthresearchtube.com/bear. But by the way, if you go to wealthresearchtube.com/top, that's a library of all of our special reports from 3 years ago until today that you can access. You can download them over the weekend and have a very good, insightful, educational weekend. And then think about what you read. Think about how it works for your own life. So
it's a great range of resources available. And I think one of the key things that a lot of people, when they jump into the crypto thing, miss is actually stopping and thinking, hey, what the heck am I doing? And being strategic, thinking about it, making plans in terms of what do you want to get out of it? How much what's your risk aversion, and all these different things that kind of get missed by a lot of people who are just rushing in to make money quickly, right? So
every broom flies is the saying. So every broom you sit on, it starts flying like you're in the Middle Ages, a witch in the Middle Ages. But in a bear market, those brooms don't fly anymore. So in a bull market, you need to sit tight and just enjoy the ride. But in a bear market, and that's where all the hedge funds make their money on Wall Street. So in a bull market, you could buy the S&P 500. You'll probably do very well. You make 7-8% a year. You won't make 12 to 13 to 15% a year, like the few consistent multimillionaires and billionaires do, or 19% like Warren Buffett does. But you'll make money. In a bear market is where that bull market strategy does not work anymore. You need to become much more of a professional. You need to pick stocks or companies or coins or anything like that much more strategically. You need to have much more balance. Balancing your portfolio is much more important than betting on the right ideas, because most of the ideas will have a low yield. So very different mentality. And I think, I can agree with you more. Education is this is a profession. Investing is a profession, And though you don't go to 4 years of college like you would do with a lawyer or a doctor, where these are ingrained in our society, they're professions, and this is not. Heck, you don't go to real estate. You don't do a degree in real estate, but real estate is a profession that has created 76% of America's millionaires and multimillionaires, including its current president. So there's many professions that are not the academic route. So, but they are still profession, and even more, they're an art.
And you still need to educate yourself. That's the important thing.
Educate, but I think too many people stop at just reading books. They think, hey, I'll go to the book section, I'll buy these 10 books, I'm good.
Investing for dummies.
Exactly. But you need to think about what you read. You need to really think, how can I make this work? Am I competent enough to make this work? Am I capable enough to make this work? Do I need a partner to make this work? Ask yourself some big questions. In the end, overall, the American corporate America has been able to return about 7.5% to 8% a year to investors who only do one thing: put everything they have in the in the low fee S&P 500 index. That's the America's 500 biggest companies. You don't need to know anything about them. All you need to know is that on average, these companies grow at about 8 to 10% a year and don't make giant mistakes as a group. And therefore, that's one thing that you can do. And it worked for all these Millionaire Next Door. If you know that famous book, The Millionaire Next Door, it's a famous study done in America where they asked, the majority of the millionaires that are next door to you, that you don't even know they're millionaires because they're employees of companies. They can be low-level employees. Mm-hmm. Hey, all I do is I put money in the American free enterprise machine, and I know many people are very bearish on America. They think it's plateaued. They think that China is going to be the relevant player in the world. That's true, but remember this: America's businesses, and I'm not a permanent bullish on America's businesses, but I understand history, and I've invested myself since the year 2000. So you can imagine I've heard many stories about the demise of America. Just to give you an example, McDonald's, as American as it gets, 67% of its sales are outside the U.S.
There you go.
Starbucks opens, just to give you another, just a gouge. Starbucks opens a branch in China every 15 hours.
That's ridiculous.
It's insane.
It's absolutely insane.
They have about 14,000. McDonald's has about 14,000 branches in the U.S. Starbucks has about 4,000 branches, and they want to do the same thing in China. But just two companies that are iconic to America, but they're expanding globally. The world knows this. Management teams know this. So, but the big picture that I want to basically share with you and your listeners is that it's very important not to fall in love with asset classes, but to make sure that you put into perspective everything and anything in the context of education. Educate yourself. Think about what you're doing. Think about your personal competitive level with regards to everything else that's going on, and then you'll be able to make good decisions. And your channel is a fantastic resource for that, because I've listened to many of your shows. That's exactly what you do. You make sure that people are grounded and that they don't think that there is such a thing as a price always going up. It's just the price mechanism for every asset class doesn't work that way. There are very lengthy bull markets. As you know, living in New Zealand, you can look over to Australia and to their real estate market that has been going up for about 45 years now. A very long bull market in housing, but now it's starting to come down. There are many catalysts, pro and con. Just education is the key.
Absolutely. I wanted to shift the conversation a little bit over to, I guess, to Wall Street. I know we can talk a little bit about stocks and the S&P 500 and things like that, but the big I guess, news recently, or the big trend, or what everyone's been talking about a lot recently, is that Wall Street is getting more and more into Bitcoin all the time. We have, the Intercontinental Exchange announcing Backed, which is a very big announcement from the Intercontinental Exchange. We have Fidelity announcing that they're getting into crypto. So why do you see these big players getting in, and what do you think we can expect when these big players are, really deep into this market?
Well, BlackRock, the world's largest asset manager, it manages $6.5 trillion. $6 trillion, right? So they're getting into cryptocurrency investments, blockchain investments. Goldman Sachs is doing the same thing. Bank of America is one of the largest patent holders in the blockchain industry. IBM, obviously, big player. Microsoft, Bank of America. So and if you go to blockchain conferences, especially in the oil industry, like with Chevron executives or Exxon, you'll see all the JP Morgan people there, everyone there. The Wall Street or the big financial companies and big technology companies, they have ways of thinking about how their specific personnel, their human resources, their labor force, how they can monetize cryptocurrencies. Look, for the international exchange, for the Intercontinental Exchange with Bucked, cryptocurrencies trade 7 days a week, 24/7. I mean, the Wall Street is open in those hours. You know how the operating hours for the New York Stock Exchange were established? They were established in the back in the day because all these rich robber barons in America wanted to play golf from 4 p.m. So, but it's true.
That's ridiculous.
They wanted to wake up not too early, so that's why it's 9:30 a.m. Eastern, and they wanted to do their leisure hours. So that's why the market is open 5 days a week, and from those certain hours, because that's the life the people who are the richest industrialists wanted to have. Bitcoin goes 7 days a week. It's borderless, and it's basically the future, right? Can you compare? It's like comparing a brick and mortar shop to Amazon that's working 24 hours. So they are getting into it because that's where the future is. But they need to have. They're not like you and me, so they can be on the fringes of investing in something that's perhaps regulated, perhaps not, then working with a tax attorney or with a consultant to get all the shit sorted out. They have clients and they have $6.5 trillion. So they need a custodian service, which is what Bucked is, and they need they have to abide by many rules. It's the same with cannabis, right? Cannabis investment. You and I can make them, but Abbott Labs, which obviously wants to not only produce Similac and all the other great stuff that they do, but they want to get into pharmaceuticals for cannabis. They can't do it because it's illegal on the federal level. So, or any of the other pharma giants, right? So they have to comply with certain things that we as small-time investors, or doesn't have to be small-time, but individual investors don't have to comply with, or we can run the risk and then mitigate that later. So I think the big boom when it comes to the institutional investors is ahead of us because we've seen none of them. Yes, you've seen Tim Draper and the fact that you even know the names of these people means that there's so few of them. So
early pioneers, right? When the big boys get in, so to speak, there will be so many hedge funds and everything investing in Bitcoin that, people remember, oh, Draper, he was one of the early guys, but everyone that comes after that, not so much anymore.
Yeah, and it's not even just Bitcoin. It's blockchain in general. Blockchain technology has many use cases. I think Rubini is very wrong in terms of he's saying, hey, there's no killer app yet. In other words, there's nothing that everyone uses. He says, look, 93, the internet was out. 2000, everyone was on email, right? So there was a killer app. And he's saying there's no killer app yet. But the internet didn't have regulatory problems and many other problems that the cryptocurrency world has to face and deal with. And I think another thing that's important to understand is that Bitcoin was originally mispriced. So when the original transactions took place at a cent, 2 cents, whatever it was, these were friendly transactions, not business transactions, and therefore they were mispriced to the downside. And a lot of assets don't do that. So if you and I were to take a company public, we would have a business evaluator appraise the company, and we would take it to the market in that price, or we would try to overshoot it, right? We would try to make money by selling expensive assets to investors. Those guys were passionate about what they did originally, and those first transactions were done more to see, hey, this works, right? And I think that's also an important thing to realize, that if this wasn't a mysterious guy, if this was a business person, the initial price would have been probably $1,000 a coin, right? Or something of that nature. You would say, this is revolutionary. You know, this is something that I can price for $1,000. That's the first transaction. So I think that's important for people to realize as well. People think about these obscene gains. They only exist in certain situations where it's from nothing to something. It would be the same as the pilgrims that came here to New Zealand, right, and took over land for free, and then flipped it for whatever it is today that New Zealand land worth. But you can't come in today and buy lands for free here, right? You don't have the same opportunity. Same with Russian oligarchs, right? When you get assets for liquidation or for free and say, hey, run this factory, here's the equity deed to it, and here's the title to it, you'll make money. Slave labor, same thing, right? When the spreads are abnormally high, you can make a lot of money. But in a competitive world, it doesn't happen because so much competition is fighting for every loose access dollar that you really need to have something special. Bitcoin is something special, and therefore it will always command some sort of a premium over either the other coins or over the mining costs, and will not go into lengthy periods of negative mining costs. For example, oil does, many times where companies are actually extracting it out of the ground for $80 a barrel, and then going on the public markets and selling it for $65. So you wake up every day to lose $15 a barrel. So it beats shutting down the drill, because to start it over, it would be more. But anyways, what I'm trying to say is, when you have something unique that you can't create direct competitors to, you have something very interesting on your hands. So to kind of wrap this up, Wall Street is getting in there because there's going to be tremendous ways to monetize this, directly by investing in cryptocurrencies, directly by investing in blockchain technology, and just by doing what Wall Street does, which is generating fees from trading. And I think there's going to be a lot of trading done on the blockchain going forward. Doesn't have to happen next year or or the next, but it just depends on the development team, right?
Yeah, and the long-term perspective of this is very exciting for anybody who actually looks at everything that's being built. I mean, Bakkt and Fidelity and BlackRock and all these guys, they're not getting into it to play in a little kiddie pool of, $100 billion. It's, they're getting in because they see the potential for this technology, and Bitcoin just the tip of the iceberg of the blockchain iceberg, essentially. Now, what about the Bitcoin ETF? This has got a lot of press recently, this, past 6 months. Everyone's talking about the Bitcoin ETF. Every time it gets delayed, people despair. What are your thoughts on it?
Well, it's going to happen. ETFs are now the majority of the trading in large cap stocks. So people don't, think stocks. When you buy a stock, when you decide, Lark, for example, you say, hey, I'm looking down at my computer here. I see Intel's chips are in my computer. I like Intel. I think it's a great company going forward. I think it's pretty cheap. I've done my research. I want to buy 20 shares of Intel, for example. When you buy 20 shares of Intel, you become a partial owner of this company. So imagine buying a pizza place down the road. Would you buy that and 3 days later sell that? No, right? You're buying a pizza place, you want to grow a business. Same thing with stocks, but nowadays, the average investor holds a stock for 6 months. Imagine that. Like, an annual shareholder meeting needs to happen twice a year because the entire ownership has changed every 6-month period. Just think about that. For a company like Apple, think about millions of people that own it. They will not own it in 1 year. So the people are not long-term investors anymore, and it's a shame because the longer you hold a good company, the better. The more the market's noise, like a correction or a bad quarter or something, it becomes irrelevant. If you smooth it out, if you look at the company, go back and look at great companies that just make basic foods for everyone, like General Mills, Pillsbury, right? The dough, and plenty of other brands that they have. Look at a 30-year chart of it, and you'll see, you'll look at 2008 like it's a bleep on a map. Because the longer you hold a company, the less it becomes risky, because what can happen on a short-term basis doesn't happen on longer-term basis. So, I'm sorry. Could you repeat that question? Just
Yeah, just about the Bitcoin ETF. You know, if you see it, what do you think the impact will be for the market for the Bitcoin ETF?
Yeah. So most investors right now, they use ETFs and computer algorithms, which are in charge of about 80% of dollar volume every day in the U.S. Stock market. They usually go with ETFs. So ETFs are sort of the go-to investment vehicle right now. Obviously, the low-fee ones are much better. And a Bitcoin ETF will happen just as there's a gold ETF, a silver ETF. For every commodity, there's an ETF. I'm not saying that Bitcoin is a commodity, but it can trade as commodities do. And there's ETFs for everything. So very legitimate product. It's going to happen. I believe that behind the scenes, there are certain people that are trying to make sure that they get the ETF dibs, first dibs on it. So
I have a feeling this is the case as well.
Yeah. So it could definitely take a few more months, but what's a few more months in the bigger picture? And so I mean, it's all bullshit until it happens, but it will happen for sure. There's literally no reason to it. That early years fear mongering with Bitcoin helping to promote terrorism attacks and
all the bad things in the world, basically.
Exactly, and it stopped. Right? You don't hear about that anymore. Now you just hear that it's volatile or something else. Every day something else comes up. Though it was very not volatile for about 2-3 months here, where it was pretty much
those are good times.
Yeah. So it's in the bigger picture. It's we need to just have the patience, and the Bitcoin ETF will happen.
That's it. That's it. Lior, this has been a very, very interesting chat. To everyone out in the audience, there'll be links down below to any of the websites that were mentioned, so go ahead and check those out. There's some great information over there for you, and thank you so much for the time today.
Thank you, Lark.